Hey, how's it going? I hope you're doing fantastic. I'm here with my great friend Marvin. It's an honor to have him on the show. I want to congratulate you as a listener, because to me, Marvin is multifaceted. He's just an extraordinary human being. He's not an average real estate agent. He is also a real estate investor himself. He has deep understanding about real estate investing and also beyond. Because beyond, what do I mean by that? He is so very well versed, and he practices health and fitness so vastly. He's actually a triathlon runner. He's a champion, and we actually met at our local gym here in town, in suburbs of Toronto. It's an honor. Right. I've been touched with this beautiful soul. So with that, I want him to talk a little bit, and then we're gonna have an extraordinary time with him. I have prepared really personalized questions with him, because I'm actually genuinely interested in getting the knowledge and wisdom that you can share with us, so that we can enlighten ourselves and our viewers vastly and deeply. So with that, if you don't mind, talk a little bit about what you want to talk, and then we'll proceed.
Sure. Thank you, Ashley, very much for your introduction. That was overkind, overwhelming. Okay, so I'll try to tone it down a bit. No, I'm just kidding. So I've been in real estate, in the real estate industry this will be a 14th year. And before that, I was 13 years in the financial services industry in Canada, in Bay Street, and trading equities, things like that, and derivatives and things like that. And then the financial crisis in 2008 and 9 kind of made me think. At that point, I was thinking, how do I build wealth, continue to build wealth? Because all of a sudden, stocks dropped like 40%, things like that. The whole Dow was down. And a lot of people lost a lot of money, and I lost a job too. Yeah. So a lot of people, there's a lot of stock wealth that was destroyed and jobs destroyed. And so that made me think, real estate in Toronto was still kind of, building, was still going at that time. And my wife and I, we were investing in pre-construction. So pre-construction condos in downtown Toronto in 2004, 2005. If you kind of dial it back to there, then it was like $200 a square foot buying a condo versus today $1,200 a square foot, and you can rent it out, right? And cash flow positive, right? So all that dynamics has now changed. The economics changed. The whole financial landscape has changed. Now. Of course. And so if you fast forward today, so much has changed. I can't even believe it. Now, invention of Bitcoin. The amount of debt that we've been amassed as household, government, and corporate is incredible. And how we kind of proceed as a society, even because not just with Canadians in general, because we're a vast group of people from different backgrounds. How do we continue to build wealth? Right. So that's the question that I'm here today.
Yes, of course, and we're gonna delve so much deeper into this, and then this is not gonna be just one session, obviously, because I know the depth of your knowledge and wisdom about the area. I'm just very curious. But for the sake of the time restriction, let's just delve into the questions to be like systematic, if I may.
Break it down.
So very first question, Marvin. What's your philosophy of, particularly with your niche, which is real estate investing? What do you think? What's the philosophy?
Right.
What's the robustness of that?
Right.
What's your favorite thing?
Right.
Yeah.
So I remember when I was getting into investing, right? Whatever the asset class would be, I'm always looking for. It was a 10-point rule, basically. It's like a 10 rule, and 10% rule, basically. Right. So if you can get 10% on your money, this at as low risk as possible, this is something you should look at, right? Now, given the fact that 13 years ago, the cost of money was basically zero.
Right.
So, if you're putting at 0 to 10%, right, you're netting a very nice amount.
Yes.
Right. So, in the criteria wise, what I was looking at was, basically
by the cost of money, he's referring to borrowing money and
interest rates.
Yeah.
That's right. So, short-term interest rates were virtually zero because of the great financial crisis, and then they had to go to zero, and then government has to pump money in to spur the economy, right? Back then.
Of course.
So, my philosophy was looking for 10% or better, right? And so I remember doing, basically cost analysis, basically, on condos and things like that. And they were, on an annual basis, the returning was incredible.
Right.
More than 50%.
Right.
I can tell you, back then, this was like dial back 15 years ago, right? So if you invested like 15 years ago in Toronto, in downtown condos, every year you're having returns of 50% on 0% borrow. That's a spread.
Did you say 15% or
50?
50
or more? Yeah.
Are we talking about capital gain, or are we talking about?
I'm talking about more cash on cash.
Cash on cash. Okay.
Yeah. So if you actually put that much down, you can get 50%, or in some cases 100%.
Right.
In some cases 100%.
Right.
With zero money, basically at your cost, right?
Right.
And then at that time when
they allowed zero down payment at the time.
Well, it's virtually zero.
Yeah.
Like if you think even if you could get mortgage rates at 1 to 2%,
of course,
it's almost like zero.
Yeah.
I mean, I've told many people like even back then, if you can lock in rates at like 1.5 for 10 years.
Yes.
That is fantastic, man.
Yes.
You should just take as much as you can. Okay.
Yes. Of course, that's a dream now.
Right? It's a dream. Of course, it's a dream. Right? But you could get a 1.5% mortgage.
Yes.
Back then.
Yes. Of
right?
course.
You could. You technically could.
Yes.
And then the mortgage restrictions were much lower.
Yes.
Much lower.
Yes.
Like the qualification, the criteria.
Of course.
Right. So it was easy to get a loan.
Yeah.
Let's just say.
Yeah.
And you didn't even have to use stated income.
Yeah.
So you know what I mean?
Yeah.
You didn't have to use stated income. I mean, it was just so easy to borrow money. Right. 15 years ago, it was just completely easy to borrow money. Right. As long as you had a job, basically.
Right.
You could borrow money.
Yeah.
And then you go invest in things like real estate, like gold, like something that was returned, right? Because gold back in 2004 it was like $400 an ounce. What's it today? It's like $2,100 almost, right?
Yes.
So, you know what I mean?
Yes, of course.
It's that type of spread that you're looking at.
Yes.
Of course,
Yes.
if you buy if you buy it for personal consumption use, then it's different.
Yes.
Right? You're never going to get the return back. But that kind of mentality, like the 10% rule, was in my brain.
Yes.
And then
You would have not gone for anything less than that.
I would look at it. I would look at it because like just having cash was 0.75, right, back then, and GICs. Right, it's just not worth it. And then I was an equities person, so basically, I dealt with stocks.
Right.
And we went through many bubbles and bursts. So tech bubble, I was in it. .com, I was in it. Burst, again, people lost a lot of money.
Yeah.
Then the housing bubble in the States, and then people lost a lot of money and jobs.
Yeah.
So been through a couple of bubbles that way, and then so why I fell on real estate was that in downtown Toronto, like back in 2004, right, there was just starting to build, right, like King and Spadina area, that entertainment district, it was just starting to build, right.
Really?
So you can really get in on the ground level, really, pick up something pre-construction, just put a down payment down. Take keys, or not even take keys. Like 1 or 2 years, the condo's ready, rent it out, and for 1 to another 5 years, have it rented out, cash flow positive.
Yes.
right?
Yes.
Very high cash flow.
Amazing. So much insight. But I have to move on.
Okay. I was going to go a little bit more.
Yeah.
I was going to go just one more point.
Yes.
Yeah, sorry.
Yes.
So that in 2011,
Yes.
I actually changed.
Yes.
Instead of condos,
Yes.
I said,
Yes.
look at new market.
Yes.
You could, for the same price, a condo and a semi, you could actually buy 2 apartments
Yes.
and 2 incomes.
Yes.
Same price.
Yes.
Same price, 300,000, 300,000. But you get 2 incomes here.
Yes.
So the ratio is actually higher on here because you're getting a higher return on this side. That's why. And it was freehold as well.
Yes.
So that's why I switched, to
Okay.
multi.
So you're happy you moved that switch?
Yeah. No, yeah.
Okay.
Yeah.
Beautiful. Moving on to the next question, as I'm sure it wasn't as significant as now, which is the movement / hype of AI. And people, a lot of people are afraid of it. For the sake of argument for real estate investing, what's your ideas on the effect of AI on for people who want to do real estate investing?
Right.
Should they be afraid? Should they use it as a tool?
Right. So on the front of AI, I'm still, even myself, I don't fully understand and use all of it. I only use it in like the ChatGPT to certain descriptions, basically. That's kind of the extent I would use it right now. In terms of for investing in real estate, no, absolutely it's a tool. Absolutely. Because let's face it, data, right? As we know, data is all out there.
Yes.
Right? So you need a tool to kind of to bundle this data and then make something meaningful, like make a meaningful description of it, of this data. And AI can be used to do that.
Yeah.
Such as like if you're comparing different markets, right? Can you do a comparable sales history for this market for me, this market for me, and tell me where is going to be lower risk and higher return.
Yes.
So it can be definitely used.
Yeah. Okay, it's an honor, right? So I want to keep it really concise, but also deep. So I've asked Marvin to actually enlighten us with his ideas, which is really appreciated, on the questions that are systematic, but also very personalized. So I want to ask you, Marvin, if I may, what's your philosophy? Why did you choose real estate? Why did you stay in real estate, particularly not an agent, not as an agent, more like as an investor, which I know you are. So if you could enlighten our audience, that would be amazing.
Excellent. Yeah, thank you, Bobby. I think my real estate philosophy is really based on investment principles. And I've always had it in my mind of what's called a 10% rule. And very easy is basically I'm looking for net would be 10% return on my cash, on your investment. And back in 2007, kind of 6, so before I was in the working in the real estate industry, my wife and I, we were investing in pre-construction condos in downtown Toronto. We could, borrow basically at zero, virtually zero, and we could get more than 50% returns.
Yeah.
Right, on your money.
Amazing.
Yeah, per year, annually. So
unbelievable.
And so it's secured by real estate. So the other thing I liked about real estate, obviously, because it's tangible. It's you can touch it. If the market value goes to zero, you have a replacement value. That was the other thing I wanted to say, is that for insurance purposes, you have replacement value.
Yeah.
You could take the wall and give it to somebody. Yeah. It's worth something to somebody. So that was the other thing. And then because I was working in the stock business, which is all paper money. Yeah. Which could go poof up like that if somebody wanted to value it at zero. So so those are kind of the criteria that I was looking at. Kind of 10% rule, tangible, and something local too. Yeah.
Okay. Amazing. So next question, if I may, is a lot of people talk about AI these days, and this is a new phenomenon, right?
Yes.
How would you feel about it, particularly for the real estate investing? Should people be afraid, or should they utilize it for real estate investing, but also like relevant industries like construction, for example. I know that that we can probably expect robots building houses.
One day.
So
Yeah,
I don't know
true.
how soon, but
No, it's true. So I think on that front, AI is built on a lot of data, big data, right? As we understand.
Right.
And so when you have a lot of data and you need to understand about a market,
Yeah.
whatever that local market is, you can use the AI bot
Right.
to basically combine, analyze, and spit out like an answer for you,
Yeah.
if whatever that query is. So I think it can do a lot in terms of that tool.
with respect to real estate investing.
Correct. And I think on my own practical use so far, it's been very, very surface level.
Would you think
So-
you're going to be using it more often as we go along?
Yeah, I will, but I have to, like a lot of things, these new things, like this that we talk about, like technology especially, I need to test it out.
Yeah.
I need a runway
Of
to
course,
test it out
of
first.
course.
So I need some time to test it out. Right
Yes.
now it's too early.
Yes.
Too early to tell.
Yes. Please do let me know.
Yeah,
I don't know if
no.
you remember, but I had an AI firm prior to doing this.
Yes, I remember that. So you said
Yes,
that.
yes. Okay, so beautiful.
Awesome.
Thank you so much.
You're welcome.
So moving on to the next question.
Sure.
Okay, so this is personal. Marvin and I have been really good friends, and Marvin recently lost one of the beloved members of the family,
Yes.
specifically your mother.
Yes.
God bless her beautiful soul. We were at the funeral, and
Thank you for coming, by the way.
just no.
Thank you for coming.
People
That was-
just loved her adorably, so I want to ask you, how do you balance family life and losses and everything in between
Wow.
the professional life that you
Wow. That's a big question. Especially last year, 2023, was very personal for me. Obviously, I lost my mother. So I'll just go through a couple of things.
Yeah.
So it really affected me because my dad also had a stroke, and he became disabled. And he had months of rehab, and we had to take care of him as well. And then my mom was diagnosed in end of July, kind of mid-year, and she was declining rapidly, and I had to take care of her as well. And then I lost an uncle. I don't know if I told you.
No, I
lost an
don't
uncle.
remember that. Yeah.
So I lost an uncle
Wow.
as well right after my mom passed away from complications from COVID. And that was in December. That was just last month. Yeah.
Wow.
And so it was very hard on a business level to do business last year for me. I just had to step away.
Can you share with our audience what tools or strategies you use to cope with the loss and grief and everything in between?
So I do a lot of exercise. One of the main kind of drivers for me is training in triathlon. And I did 90% of an Ironman Tremblant last year.
I remember that.
90%, okay, it was almost there.
Yes.
So, and then I did like 3 smaller triathlons throughout the year, and that was great. And so training for that.
He's saying small, but we don't know. It's not really small for like
No, very small.
99% of people.
Yeah.
It's even my wife, you know her too, right?
She's a huge runner.
Yeah, she is, but she
ran with
she hasn't done what you've achieved athletically for sure. And then that's so huge part is that, right?
Yeah, but I think I would actually back it up even more to the year before.
Right.
So even the year before, I already started, because it's all health and wellness related a little bit, and I would say I already started to change my diet. Okay, and basically my diet was like, I said 60-40, kind of 60% meat, 40% veg, and then I went to 90-10 last year.
90 wedgie?
Yeah, 90 veggie and 10. And then, so these couple of weeks I went back, I'm on meat right now. So I kind of teeter back, but then, I'm starting to train for this year.
Yeah.
So I will go off meat again for 90% of the time. And then also I do intermittent fasting. So I do a 16-8 kind of cycle, 16-8, kind of 16 off, and then 8 hours of eating. So 12 to 8. I try to eat within that window. Okay.
Okay.
And then I do a 5:30 wake up to go do workouts.
Yes.
Yeah, I do a
we
5:30
share that
workout.
too, right?
Yeah, do a workout.
Yes.
I'll do yoga. I'll do core conditioning. Do cardio. We'll do swimming. We'll do bikes, like spinning,
Yes.
and of course running, treads, ellipticals.
Yes. Yes. So the videographer, you don't see her, but she's also a personal trainer.
Wow.
Yeah, she's been for years. Every person in our team is somehow associated with fitness, but for the most part, this is Marvin. Awesome. I personally have a lot to learn from him, and that was actually my next question for you.
Sure.
How would you? And a lot of people in business, for example, think, especially once they start out, they think we are just focusing on business. Little they know how important health it is.
Huge.
Until something happens to them, right?
And I think from the pandemic, just want to add, from the pandemic, I saw a lot of people, get
Fat.
big, for less of a better word. Yeah. Fat, big.
Yeah.
And because we were sitting at our, at your home, kind of working off the home, right?
Yeah.
And not doing any exercise. So that I wanted to lose weight as well. So I lost like 40 pounds.
You did?
Yeah, I was high of 210.
Amazing.
And then I came down to, like 170.
Did I tell you a very similar story happened with me?
No
Remember?
way. Yeah.
60 pounds in
Yes,
pandemic.
yes,
Yeah.
that's right. Right. So that was the other reason is to lose some weight, get fit to complete an Ironman.
Yeah.
Even though I did 90%.
Yeah.
But
oh no, that's no small achievement. For sure.
That's an story in itself.
Yes.
But to do that, and then obviously, because I'm above 50 years old.
How old are you for me?
I'm 51.
Oh,
I'm 51 years old.
So
I'm serious.
Wow.
But people tell me I'm 38. I look 38 years old, right?
Yeah.
But I'm 51 years old. Yeah, if you can imagine it, right? I hope to retire soon. I'm just kidding. Hope to retire. I want to retire soon.
Oh man.
We have all these millennials, probably on the channel.
Yes.
I need to work. And you know what? The other thing was I see a lot of millennials going into the real estate industry. A lot of young people. So that's great. Congratulations. That's fantastic. Like 20 years ago, people wouldn't even think of coming out of school and just going straight into real estate. Like, wouldn't even think of that. They'd have actually, people do other things, and then they kind of drop into real estate because it was something that, it was easy to get into, right?
Are you talking about becoming an agent or
becoming an agent? Sorry, I was talking about becoming an agent. So a lot of millennials actually straight out of school going into being an agent. I know many of them. I've talked to them, and I've taught some of them. So
Okay, you mentioned about nutrition, and it's so important. And really, why is it important for real estate investing and for business? How can you narrow it down? Why?
That's a really good question. For especially in real estate, it's a long-term game.
Yeah.
So you need to have some types of fuel.
Of course.
And you yourself, the body has to be healthy.
Yes.
Right, to be able to, run this marathon or run this endurance. I look at it as an endurance game. Yeah. So you have to, keep healthy with your body to be able to keep up with the game. Yeah. Right. It's very equivalent.
That's that. So you're referring to stamina, right?
Correct.
Stamina.
Correct.
But also on a daily basis. How on a daily basis, and you do it quite often, almost every day, right?
Yes.
Nutrition doesn't stop for the most part, unless you mention intermittent fasting.
That's correct.
But also
that's correct.
Is there for you to elevate your game, essentially.
Correct.
Right?
Correct.
So how come a lot of people don't care really too much?
Well, you know what? I find a lot of people they kind of delegate it to as I don't have time. I don't have time. And you know what? I see that as an excuse more. There's always time.
Yes.
And especially, if you have to get up at 4 a.m., 4 a.m. to do something, you have time.
Yeah.
Maybe you have to go to sleep at 8.
Yes.
Still get your 7 hours sleep. So actually, here's the 4 things. Here's the 4 things. You ready? Number 1 is your diet.
Diet.
Number 2 is exercise,
Exercise.
obviously. Number 3 is to get 7 hours of sleep.
7 hours of sleep.
Okay? And the 4th one is to have a lot of nature.
Nature. Okay.
You need to be in nature.
Yeah,
right?
outdoors.
So outdoors, you need to get outdoors. You know, I do a 20-minute to 30-minute hike, okay, from Monday to Friday.
Okay.
After dropping off my kid from school, I'm doing a hike
Amazing.
in the forest. So, because I live on the conservation of oak ridges, so it's great.
Yeah.
You can just go and then you do your hike, and I do some other stretching exercise. Like I do stretching exercise and meditation.
Yes.
Actually, here's the other thing: meditation.
Meditation. Yeah.
So whatever, you know, it doesn't matter what you believe in, your faith is,
Yeah.
do some meditation
Yeah.
because it calms your mind down, relieves stress, right? Improves your immune system,
Yes.
right? Reduces inflammatory,
Yeah.
right? I kind of learned all this stuff like through triathlon training, to be honest.
Yeah.
And meditation and yoga, hot yoga, by the way, at Movati. Okay, Nora, the best. A plug for her.
Okay.
is like fantastic. Oh my
Yes.
God! Like hot yoga is like the most.
Yes.
It completely relaxes your body, and it allows your mind to focus.
Yes.
Right. So, again, you need focus.
Yes.
If you're doing
Focus.
any type of business, whatever business you're doing investing, you're watching markets, you're doing stock market investing, you're doing Bitcoin trading. Doesn't matter what it is.
Well,
Okay.
yes.
That's what
You'd be more efficient with focus as opposed to not.
absolutely focus and determination.
Yeah, exactly. Focus, determination. Okay, so that's that. But also, I had this question for you, which is about mentorship. I know that you run a company. It's called Marvelous Homes. Mr. Marvelous.
Mr. Marvelous.
He is really marvelous, as you can see. And
Thank you.
so, how is the mentorship in Marvelous Homes work? Can you elaborate?
Yeah, no, absolutely. So I do take on young people for like a day, kind of like day training.
Yeah.
And kind of like if they want to do day training or week training, you know, they can see how I operate. I've done this before many times with younger people. Mainly it's younger people because they're kind of getting into the industry and they kind of want to see the inner workings of real estate. So, you know, I've taken them on day and weekly. Kind of like they just shadow me for that day or the week.
Yes.
So it's really great. It allows them an opportunity to see kind of my daily life as well.
Yes.
So there's a lot to it.
Of course. So remember, Marvin offers this opportunity. This is phenomenal. I wish I would do that one day too.
Sure. Okay.
Okay, that's that. And I know you are growing your on yourself. Like you want to grow yourself with not only health but also who you are with your soul and other aspects of life. You mentioned spirituality, and in here, by the way, we are not promoting any sort of religion whatsoever, right?
No.
What we are saying is that, okay, whoever you want to be, how do you personally work on yourself, or who helps you grow? Can you talk about those?
Yeah, that's huge. You know, so my parents were Christian, okay, and so I would say probably up to age 18, I was, you know, going to church and doing those things, being Christian, and I was baptized actually. Yeah. However, you know, after university, I kind of, you know, kind of veered away from that. I don't really believe in institutional religion. Yeah. So that's why, and I kind of I also trained in Aikido back then. Yeah. So I was training in Aikido, which is a Japanese martial art, which uses a lot of...
Which he is not, by the way.
That's right. Yeah. That's right. But Aikido uses a lot of Zen Buddhism.
Oh, does that?
So it's Zen. It's Zen Buddhism.
Yeah.
And if you look into the principles of Buddhism, you know, it is about meditation.
Yes.
It's about self-improvement.
Yes.
Self-improvement,
Yes.
right?
Essential.
About
Because people think self-improvement comes from the West.
Yeah.
Little they know that it actually came from the East.
Yes,
Right?
that's right. That's right.
And if you go
That's right.
deeper into like,
That's
I don't
right.
know if you've read this book. It's called Science of Getting Rich.
I haven't read that one. No.
It goes so much even before, like I think in 1910 or something like that, and
Okay.
it does talk about the fact that self-improvement and personal mastery did actually come from actually the East, particularly Buddha's
the
teaching.
Buddhist
Yeah.
teachings, right?
Yeah.
Right. So yeah, no, exactly. And so a lot of those principles, a lot of those teachings, I try to apply
Yes.
to my life. It's not that I don't say that I'm Buddhist.
Yeah.
I don't say that I'm Buddhist because I don't follow any religion.
Yeah.
But a lot of the principles I can say.
Yeah.
I do follow a guy called Ray Dalio.
Yeah.
Right. So I'm sure you've heard of him.
Of course.
So big hedge fund manager in the U.S. And so he puts out a book called Principles, and then how the world is, the world order, the changing world order.
We talked about
So
this
we talked
before.
about this, right? Exactly.
Yeah.
And so I look at his principles,
Yes.
right? There's these three main changes that are happening right now that has never happened
Yes.
in our lifetimes.
Yes.
So in our lifetimes. So I'm kind of getting off a bit, but
Yeah.
but I really do believe in this too.
Yeah.
That these three big changes
Yeah.
are it's going to change our world.
Yeah.
Right? It's going to completely change. And let me just really briefly brief it.
Yes.
So the first one is like debt monetization.
Yeah.
Okay, what that means is basically, there's all this debt out here. Okay, that all of us hold, household, government,
Yes.
corporate, right?
Yes.
And at one point in time, it has to be called.
Yes.
It has to be called back. And so you have to do something with that debt.
Yes.
Right? Or else what happens is, the problem is that governments have to print money, right, to deflate the dollar.
Yes.
Deflate the dollar and pay back the interest on that debt.
Yes.
But at one point, this debt is going to be so huge, which in the States, think about it, they're running a $33 trillion debt, right?
Yes.
And on
Trillion.
trillion with a T.
Which is
Okay, which is what they call net present value of that debt.
Yes.
Is 33 trillion. But get this,
Yes.
the net present value of off balance sheet liabilities in the US is 120 trillion.
You're kidding.
Off balance sheet. So if we add Medicaid, Social Security, veterans, student debt,
Yes.
70% of that, right? And it's all, it has to get rolled,
Yes.
right? And you have to pay interest on it.
Yes.
And so the US is paying $700 billion a year in interest payments. So therefore, that's why I'm kind of getting off topic, but interest rates have to come down.
Yes.
Because they're going to get killed.
Yeah.
Because if your GDP income doesn't cover your debt payments, you're going to get crushed on the debt. It becomes this elephant that kind of rolls over and kills you, right? It's an elephant.
Yeah.
Right? That's what debt is.
Yeah.
So that's debt monetization. That's one thing we have to control that.
Yes.
But all governments can do is print money.
Yeah.
So that's a fiat currency,
Yes.
which means that your purchasing power, and the other reason why I'm in real estate, is that your purchasing power every year is being compoundedly less.
Yes.
Less. You can, think about it. A Canadian billionaire named Seymour Sluich, right? Sluich School of Business, York University. He wrote a book called Get Smarter. Get Smarter. And one of those principles, he had like 20-something principles. One of those principles was the value of $1 declines by 90% in 30 years.
30 years. That's
Right?
so much more.
So exactly, $1 can only buy 10 cents.
Yeah.
Your $1 can buy 10 cents,
Yes.
basically, in 30 years. Today's dollar buys 10 cents in 30 years.
Yes.
If you can imagine that.
Yes.
So what are you doing to go against your loss of purchasing power? And this kind of relates to all this, right?
Yes.
So that's debt monetization, number one. Number two is kind of polarization. The fight between, the left and the right.
Yes.
Right, in the States. And then the third
Here
one,
too.
here too, same thing.
Yeah.
Polarization
Yes.
is and it's the wealth inequality.
Yes.
The wealth inequality. That's happening.
Yes. Of course.
And
middle class is going away.
middle class is getting killed.
Yeah.
When your purchasing power goes down,
Yes.
you don't, and their fixed wages are like this, and all your costs are going like this. People are asking, why does it cost $50,000 to buy a car now?
Yes.
To buy a Corolla, right?
Yes.
This is some people asking me, okay, why does it cost $50,000? Because it should cost it used to cost $15,000
Yes.
or $20,000. Yes. Cost $50,000 to buy a regular car now.
Yes.
Why is that? Right? Check out house prices. Same thing.
Yes.
20 years ago, how much was the house price?
Yes.
To today?
Yeah.
5 times the cost.
Yeah. So we are here in this club, Rich Immigrants Club, to be actually going so much deeper into these things that you mentioned and help people actually get out of that, helping them, giving them hands insights like the ones that you are doing with us. I want to close the session with my very last question.
Sure.
With all of this combined. So I want to summarize what I understood from Marvin, my dear friend, about personal growth.
Sure.
And my understanding is that, Marvin, you're saying, I'm not adopting my parents' belief in religion. In fact, I'm not sure about organized religion. Let's put it that way. We do respect every religion or faith. We are not going that route either. We are talking about personal growth. And you're saying I'm adopting my own philosophy, my personal growth philosophy, which you've been touched by Zen and Buddha, and you've been touched by Ray Dalio, all of whom I share interest with you as well.
Correct.
Ray Dalio has a principles book. He adopts a philosophy of the book, which is he's huge. Obviously, he owns one of the biggest or the biggest hedge funds managing in the world. He actually gives advice to the countries.
Correct.
Right?
Correct.
So we are not, and a lot of he's phenomenal. In here, we are talking about personal growth, and my understanding from you is that for everyone, for every audience, including myself, we need to adopt it for ourselves if we think we are independent existence, which we are. Correct. We've been given this chance by whoever it is, so we need to value ourselves. Moving on, am I correct?
Very correct. Yep, right on.
Okay.
Yep, right on.
Moving on, with whatever you mentioned, if you want to summarize, give some highlight for prediction purposes, for interest rates and the effects that we can expect moving on in 2024 and beyond, and in like 10 coming years.
Wow. Okay.
How would you go about that for Toronto, Ontario, but also Canada, and also a bit about US?
Right.
And if you can keep it in 3 minutes or so.
I don't know if we can do that, but no, I'm just kidding. I'll try to summarize as much as I can. It's actually the timing couldn't be amazing that we could talk about this right now because the SEC just approved the first Bitcoin spot ETF yesterday.
Okay.
Or it was yesterday. So that timing is incredible.
Amazing.
So you have 11 ETFs trading right now on spot Bitcoin ETF on a 1-to-1 ratio, which is going to mimic the price of Bitcoin. So I'm not advocating Bitcoin as an investment. Okay, I don't give investment advice, by the way. Okay, I don't.
Yes.
Okay.
We do.
However, with what we talked about, with the changes in wealth and something, the philosophy as well, the philosophy behind it, and something that have grown really, strength behind is basically one theory is that, I believe there will be a monetary reset, a monetary reset. I can't tell you when, obviously.
Yeah.
And the monetary reset is because of those principles that we talked about, the debt, the polarizations, the fight with China and U.S., all this kind of stuff, and all the conflicts that we see, the proxy wars that we see, even today, the proxy wars, same thing. It's all based on kind of these principles between Cold War. These are from Cold War days. And so we're going to see probably a monetary reset within the next 10 years, which means you need to have an alternative, type of valuation, I would say.
Yeah.
And what's that going to be, right? It's either going to be physical gold, right? Because gold has been money for 5,000 years. Or something equivalent, or digital gold, which is going to be something like Bitcoin. I don't know. See, again, I don't know if it's going to be Bitcoin.
Yes.
But funny enough, I have been researching, I would say, blockchain and its technology for a little over 2 years right now. And there's been a lot of interest. There's been a lot of smart money that has went into it.
Yes.
And these are not people that I would say that are being, manipulated by other parties or something. They with their own intelligence, independent intelligence, have decided that Bitcoin would be something. Something to be reckoned with. It's going to be obviously, like Kevin O'Leary says, a 12th sector of the S&P 500, 12th sector of the S&P 500, right? So it's another asset class, basically. You can invest in another asset class. And now that it's an ETF, you're going to see institutional money come in.
Yes.
So, oh my gosh, there's going to be a lot of money that's going to come into that asset class. Because everybody can invest into it now.
Yes.
Right?
Okay, beautiful. Beautiful. Thank you so much.
Thank you for having me, Bobby.
Appreciate you.
Oh my God, this was so beautiful.
Yes.
Thank you for having me.
Yes. We do want to have this conversation going on with you.
Sure.
If we have the chance and honor to be with you, enjoy your wisdom. Thank you so much, audience, for listening to us. We'll see you soon.